Welcome to TheoTrade. This is Don Kaufman. It's May 2nd, 2018. You are watching the Theo Night video. First and foremost, S&Ps down with about 5 minutes left in the trading day. They're down about 20 handles. You know, the other day, specifically on Monday in the Monday night video, we kind of asked the question, can Apple save a sinking market? Well, apparently we're getting an answer to that today, as Apple during portions of the day has been up as much as 5%. The broader market, though, really weak on a relative basis. And I'm going to show a little bit about that, some specific underlyings that are really taking some heat, kind of what we can expect throughout the remainder of this week. Let's kind of get to work and start with the fact that the S&Ps are down some 20 points. And I have to tell you, so the S&Ps are down 20. But, you know, you have your largest market cap in Apple. One of the other largest market caps, and I'm talking the largest market cap in the known universe, is Apple. Another one of the largest market caps is Facebook. Both of them are bid up and bid up quite nicely. So when you're looking at the S&Ps and they're down 20, you're kind of thinking to yourself, well, hey, that's masking. Again, Apple being bid is actually masking some of the broader weakness, not only inside of the S&Ps, but specifically inside of the Nasdaq, which is only down, again, about 0.6%. People, that is the impact that Apple can actually have. It is that large that it is actually floating the S&Ps to a degree. I mean, if you look at this from a perspective of advanced decline line, and I think it's worth looking at from advanced decline line, all right? It's not hideous, but that's ugly. It's ugly. The S&P 100, you got 80 products down. Because Apple is up and up so substantially, again, it's kind of propping up the S&Ps in, you know, if it weren't for Apple and a little bit of Facebook today, this would be, you know, ugly for the most part. But there is something broader in play over here. Well, first of all, we got nothing really out of the FOMC, nothing unexpected. What did they say? You know, oh, yada, yada, yada. We'll see you in 6 weeks. This is why I compare the Fed to Punxsutawney Phil. They saw their own shadow, 6 more weeks of winter. We'll see you, you know, fairly soon. We didn't learn anything new about Jerome Powell inside of the statement either. So we're seeing some sell side activity again with just moments to go into the cash close. It would not surprise me to see the S&P futures and even in the after hours come right back to our number of 2626. Let's back away from some of the intraday trade and let's talk a bit about what we can expect over the next couple of days. What you're looking at is a chart that I'll often look at. It's a 30-day 1 hour. And, you know, I've been talking about this now for, you know, a period of about 6 weeks. All we've done for a period of 6 weeks is literally pinging back and forth between these levels. And if you've watched these evening videos, you probably know the levels by heart. Up top over here, 2682. Right smack, where we're just north of, it's 2626. And what I keep anticipating is 2575. All right, this is a level that I believe we not only have to cross through the 2626, but I think we're going to take a shot at the 2575 and this very narrow range. But this is just filled with some volatility. It's still a fairly tightened range, and we are even contracting in terms of volatility in the last couple of days. I believe that this is not long for this world, that we're actually going to start to crack through the range, maybe even hit back down to the 2575 and kind of reassess from there. There's a couple of aspects that I want to think about outside of these levels. One of them, let me start with the financials. Okay. There's the closing bell, specifically with the financials. The financials have really started to roll over off this 28 level and now approaching the 27 level. It might not sound like much, but again, the financials have been in an incredibly tight yet volatile intraday trade. They're in a tight range with some volatile intraday trade. Today is no exception. And one of the things that really stands out to me, though, especially today, is the volatility, again, inside of the financials. It's elevated. And I expected that number to be elevated because the FOMC announcement, but I thought it would drop off thereafter. We're still sitting on a 40 cent, again, a 40 cent expected move, which is considerable given the fact that we only have Thursday and Friday left of this week. So again, expect some fairly wild and woolly move out of the financials. Now, when it comes into another aspect that really has me kind of watching, obviously we have to talk about technology, the monsters of tech. You know, the monsters of tech, and if you've never heard that terminology, that's what I call the combination, all right? And I'll even bring up the combination symbol. That's Facebook plus Apple plus Microsoft plus Amazon, okay, plus Google. That's what amounts to the monsters of tech. The monsters of tech, generally speaking, if you start to run through individual symbols, whether it's Microsoft, it's still close to the upper end of the range, right? If you start to look at stuff like Apple, Apple is bid now back up close to all-time highs. If we take a look at Facebook, listen, after the earnings, okay, after some of the announcements, Facebook has got a little bit of a bid back under it and coming close to the, again, 175, even 180 handle. It's Google that is in severe trouble. Google is now approaching the 1,000 level, which could mean a little bit more of a dire move. Okay, keep an eye specifically on Google. Again, we're talking some heavy market cap that has been heading south, and it's one of the biggest drags right now when you start to look at the Nasdaq Futures. You know, if you looked at the monsters of tech, you know, whether it's Amazon, whether it's Facebook, whether it's Apple, whether it's Microsoft, you would expect that, you know, the Nasdaq as a whole to be what? Through the roof. You would think that the Nasdaq Futures would be at or near all-time highs. They're not. Why? Google, one of its largest market caps, is under serious pressure. Now, if you're looking for a trade idea in this, we're already through the earnings, but Google cracking under 1,000, okay, you could actually have a bit of a free-for-all to the downside from that point. What I would anticipate, however, would be a shot down to 1,000 with a bounce right back up on an intraday basis. That's something I might be looking for as an intraday trade in the next few days. Again, in a larger sense, though, I want to go back to the broader markets, the S&Ps. Okay, through and through, we keep talking about weakness in the markets. The advanced decline line is displaying that. But I step back from it, and I'll give you what I would term this 50,000 foot view of the marketplace. One aspect that's incredibly troubling, even though we see the S&P is breaking down 20, okay, and people, we actually saw this again earlier in the week. So we've seen some pretty wild sell side activity. Even yesterday, some selling followed by a bounce, but we're right back down to this 26 kind of level. The one thing that really stands out to me, where is volatility? Why isn't volatility playing a role in this? You know, you just had the markets sell off 23 handles. And again, I'm telling you, this thing's coming right back down to 26, but you have the marketplace sell off 23 S&P handles. What did the VIX, what did the volatility futures do? Absolutely nothing. I'm telling you, get ready for some shock and awe in this marketplace. Volatility, okay, and specifically the volatility futures and the VIX, they need to get lit to the upside. I expect this to come back down to the 25.75 level inside of the S&Ps, and that's where we should see the volatility really start to ignite. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.